Good afternoon, good evening, and good night, and welcome to my channel. And today we're going to be talking about a new series that I'm going to start, which is Trading in the Zone Summary. But basically, I'm going to read little bits from the book and try and get these bite-sized, important parts and kind of put them in a little video for everybody. So, the first one, let me know what you think in the comments as well. Is there anything that I could do better? Because the book's quite repetitive, but I understand it's to drill stuff in your head. But sometimes it's good just to return to a video and refresh your mind about what's in the book. So this is the point of what I'm doing today. So, trading in the zone. What is trading in the zone? You might be asking. If you're new to trading, I don't know. If you haven't heard of this phrase and you've been in the markets for a while, I don't know where you've been living. But if you're new, I'll let you off. So, Trading in the Zone is by Mark Douglas, and it's widely regarded as a classic in trading literature. And when I say classic, I mean this is the go-to book, right? Once you're ready. Now, I recommend that you don't read it if you're a new trader. I recommend that you read it once you've kind of understood everything about trading. You've been trading, you've made some money, you've lost some money, and the thing that's holding you back is psychology. Then it's time to read this book. I think there's other books you need to be getting on first if you're a beginner. I read this book pretty much straight away, and it's a bit detrimental to my trading because I had things in my head that I wasn't ready for this yet. You want to kind of come in with this with a clean mind, because you have to work in your psychology so much that you don't want to interrupt it with anything. Just kind of leave it and work on it at the end. So if you're at a stage where you're making money and you're losing money, I recommend that you read this book. So today's episode we'll be looking at the 5 trading truths, and this is one of my favourite parts of the book. And he's actually got a few sets of 5 kind of rules, and one's like the fear of losing. The 5 fears, and we'll be going into that as well. And that's actually what I've made my psychology tracker based on. If you haven't seen that, check my other videos and you'll see it. So let's go into number 1 of his 5 trading truths. Is anything can happen, which is so true. Anything can happen, and in the book he uses an example. I'm gonna make my own up based on that now. So imagine you're looking at a setup, right, and then you've been all day. You know this setup comes every other day, so you're waiting for it, and then you say to your friend, "Oh, I'm waiting for this setup." You know what I mean? And your friend goes, "Watch." Opens his platform, buys £1 million worth of that stock you're trading, and it tanks and it misses your setup. Now, that's anything can happen. Anything can literally happen. I remember a few months ago, somebody kept shorting. I think it was the EV stocks. The whole sector kept getting like mad sell-offs, and we found out it was just this one guy that was making this market move mad. So anything can really happen, and it's so true. And you have to accept this. Number 2 is you don't need to know you don't need to know what's going to happen next in order to make money, which is so true. Yes, we need our edges. Yes, we need to put the probabilities in our favor, but you don't need to know what's happening next to make money. I mean, the best way of making money is jumping onto to other people's trades and kind of jump on to this momentum, stuff like that. And number 3 is there is a random distribution between wins and losses for any given set of variables that define an edge. Now, another thing you got to look at this as well is when you put a trade in, right, you best believe that there's somebody on the opposite side of your trade that believes the opposite to you. Because if you're buying, somebody in the world is selling. And then if you're buying, you also need to believe that you want a billion or whatever other people to be buying at the same time in order for that stock to go up. And I think a lot of traders don't realize this. They think, oh, I've got one over the market. You haven't got one over the market. You don't want to get one over the market. You can't be sneaky with trading. You want to trade what everybody else is doing in order to create this momentum going up. So for me, that was a big lesson that I learned, that you want to trade with everybody else. The trend is your friend in a sense. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over and another. Now, you can find an edge from historical data. You can find, I mean, most indicators, right, which I don't really use indicators, but most indicators, I know a guy that back tested them, and most indicators get 50 to 60% kind of win rate. And you could use that with price action to create an edge. And you could have a 50-50% P&L as long as your greens are bigger than your reds. That could work. So when you have an edge and you're looking at an edge, there might be somebody looking at the edge as well. Well, it's people. There might be some people doing the opposite to your edge that sees that signal is the opposite. So you got to look at an edge as more like this, an indication, not an actual kind of edge where you think, oh yeah, that's it, I've got it. No, it's just an indication. So number 5, every moment in the market is unique. Now, the way I took this as well is that you say you're playing support and resistance, for example. You're waiting for the market to hit resistance. It's hit resistance 3 times. The fourth time it hits resistance is going to be different to the third. The third time was different to the second because the price action was different. Even though it did the same thing, the price action was still different. It's still unique. There's so many variables in the market. It creates this unique movement every time the price moves. So best quotes from the book. I'm gonna do 3 for this episode. I hope 3 is not too much or not too less. So let me know in the comments. So number 1 is, I haven't seen much correlation between good trading and intelligence. Some outstanding traders are quite intelligent, but few aren't. Many outstanding intelligent people are horrible traders. Average intelligence is enough. Beyond that, emotional makeup is more important. Now, I know this myself. I know somebody that is very wealthy that got into trading and he can't do it because he hasn't got that emotion, that psychology. He's a businessman in another sense. So the way he conducts his business is different to how he conducts his trading. So I love this quote. I think it's great, and it's especially for somebody like Mark Douglas to say this. It's a lot of motivation out there as well. Especially I know somebody that dropped out of school, college, and uni and did really bad, who's an absolute and astounding trader. And I think it's because he just keeps things simple. Do you know what I mean? And I keep trying to learn from him as well, but he won't give me his secrets. Especially he lives in Poland as well, so I guess that's pretty hard. And he's probably watching this video as well, and he knows who he is. Number 2, 95% of trading errors you are likely to make, causing the money just to evaporate before your eyes, will stem from your attitudes about being wrong, losing money, missing out, and leaving money on the table. What Mark Douglas calls the 4 primary trading fears. Now, I base my psychology tracker on this, and we're going to do the next episode on the 5 trading fears. I know it says 4, but there's actually a 5th one as well. So we'll get into that in the next episode. Number 3, if you perceive the endless stream of opportunities to enter and exit trades without self-criticism and regret, you will then be in the best frame of mind to act in your own best interest and learn from your experiences. And I think this is the reason why a lot of young people can be good at trading and a lot of old people can be good at trading. Because I guess the lack of life experience and then the kind of wealth of life experience on both ends of the spectrum, I think can help your trading psychology a lot. Us stuck in the middle, we struggle. But anyway, that's the end of the episode. Please let me know what you thought about it. And yeah, episode 2, we'll do the trading fears. And then yeah, if we can get a discussion going in the comments as well, that'd be absolutely great. And also, just ignore the hate that we've been getting as well, because it's just crazy and people are gonna hate. And I knew it would come someday. I've had people on my Instagram and that, and I guess people have been burnt by the market before, so I don't know. If there's anybody that is hating, just at least take a moment to watch some of my videos, and I hope you can learn something from it as well. But anyway, peace out and see you in the next episode.